Assalamualaikum dan salam sejahtera. Saya Najib Arif dan ini adalah Niaga AWANI. Dan kalau kita melihat kepada usaha Kemampanan di COP26, banyak perkara digariskan dan juga dicapai dan juga ikrar itu disuarakan oleh kebanyakan negara. Namun bagaimanakah ini memberikan kesan kepada syarikat-syarikat dan bagaimanakah kesediaan mereka, kemahuan mereka dan juga dasar-dasar yang akan disusun oleh pihak-pihak kerajaan di peringkat dunia sendiri. Itu yang saya bincangkan sepanjang jam ini di Niaga AWANI. Sedang bersama dengan Pentadbir di United Nations Development Program UNDP, Achim Steiner. Kita saksikan rakaman temu bola ini.
Mr. Steiner, thank you so much for joining us this morning. First of all, we heard a lot about free carbon emission at COP26, and sustainable technology and innovations will be key to decarbonization journey. Certainly, it involves commercial companies to innovate and adapt sustainability. How can businesses adopt sustainability innovation, especially for emerging market? And how should companies allocate financial and non-financial resources to execute sustainability targets?
Thank you very much for having me on the program, Najib. And I think your first question really both looks at the distinct challenge of carbon emissions, of decarbonization, but at the same time, in some ways, it's nothing new to business. Business has always adapted to changing markets, to the emergence of new technologies, to changing consumer preferences. And I think the challenge really lies in, first of all, the magnitude of the transition that we now face. It is a race against time, and it is a global race against time in terms of decarbonization. So assuming for a moment that we all believe that the future will be a decarbonized one, certainly every enterprise, every investor, every board, every shareholder will have to look at how is my company preparing for this new marketplace. It may be simply that people will not buy carbon-intensive products anymore. It may be that regulations and laws will simply make it essential for countries and companies to transition out of high carbon emissions. So the real challenge becomes one of how do we deploy technology? How do we invest in these transitions? And you also raised the question, is there a specific challenge for emerging markets? Certainly in the way that access to capital, access to technology, and the ability to rapidly draw on a national marketplace to develop these approaches is going to be a critical part of it. So in short, I think companies are faced with a challenge that is not generically different, but the challenge of decarbonization, the pressure of time, and the deployment of new technology and capital clearly present major strategic challenges, but also opportunities. And I think increasingly the debate about decarbonization is moving from one of constraints and challenges and costs to one of opportunity, new markets, and new revenue streams.
Mr. Steiner, innovation can only thrive if businesses have a culture that is supportive of new ways of doing things. Changing culture is not an overnight job, obviously, but it requires a lot of effort and togetherness. Do you see this as a major hurdle to the sustainability effort, and what would be the cost involved, and how would companies translate these costs into revenues?
Well, again, the business of business is, in essence, innovation. It is the attempts to try and find opportunities, either with new products, better ways of doing things, cheaper production costs, in order to gain market share. This is obviously always an objective that any business will pursue. The question is, how do you invest in innovation? And are you in a position to also develop, first of all, the investment pathways that a company needs? And secondly, have you got the skills on board? Sometimes companies have been producing with the same technology in the same established marketplace, sometimes through government regulation under very protected circumstances, the same product, the same service for years, sometimes for decades. Disruption is in the nature of markets and business, and I think decarbonization is in that sense a disruption and certainly poses new challenges. But this is where we see enterprises across the world, and not only in the established industrialized economies, but particularly also in emerging economies in developing countries, really leapfrogging with technology. The convergence of decarbonization with the emergence of digitalization, for example, has created entirely new possibilities to run, for instance, renewable energy grids, to find new consumer markets. And in that sense, I think it is the ability of a company to recognize where markets are going and to invest early enough in the kinds of responses that are needed. This is the basics of business.
Mr. Steiner, what do you think is the principal motivating factor for someone to invest in sustainability? What time span are we looking at? If this is a fact eventually, or is this here to stay?
Well, first of all, let's assume for a moment that sustainability is something that is positive in terms of the impact it has on our societies, the opportunities it creates for our children, rather than actually precluding choices for them in the future. And in that sense, it starts with each individual, whether you're a CEO, an employee of a company, whether you're a civil servant, or indeed somebody who is still at school. It starts at, really the dining table of our families. I mean, parents who will sit with their children and talk about climate change and basically say, we don't care, is an unlikely outcome of a conversation. So sustainability comes down to, first of all, it's the right thing to do because it creates a fairer world, a more sustainable world. Particularly if you have children, you cannot ignore the implications of not acting on climate change. But very quickly, sustainability also becomes a strategy for dealing with changing marketplaces. We know that in today's world already, and certainly in tomorrow's world, consumers will be hyper-networked, hyper-conscious, and they will certainly prefer to buy products and services from companies who are helping to solve problems rather than making problems worse. And to those who still believe that there will always be a market niche for, let's say, dirtier, higher carbon footprint products, at some point, the law and the regulatory frameworks will also come. We could have still been mining asbestos to this day, knowing full well that it makes people sick and ill. We could continue to produce in the pharmaceutical sector opioids that are literally killing tens of thousands of people in the name of pharmaceutical cures. At some point, the law steps in, society says, this is just not good for us, it's not good for the next generation, and it will be stopped. So I think these are, in a sense, different entry points to understanding how sustainability begins to influence, first of all, us as citizens, but also us as individuals who either buy products or don't buy them, or indeed leaders of businesses who ultimately want to have the best people working for them and have market prospects for the future.
How does sustainability investing differ from investing in resources? There is a view to say that investing in beverage industry with access to water is valuable, even if the practices of such firms are unsustainable. What do you think are the risks of such investments as compared to ESG investing?
So, in answering the difference between sustainability-oriented investing and, let's say, more traditional investing, begins really, first of all, with the fact that anybody who is looking at the longer-term success of a business can recognize that sustainability is becoming increasingly a driver, both for investors who invest in your business, for consumers who buy your products. So the basic logic of wanting to be a successful business is increasingly dependent on whether it is perception or measurements of how you are a sustainability-oriented business. But it also sometimes comes down to very basic issues. For instance, we see increasingly a view of the world where sustainability investing is also about, for instance, looking at how a product that may have sold very well yesterday will simply no longer have a market tomorrow. Then we have stranded assets. Particularly financial markets are increasingly looking at carbon emissions, for instance, of a company and its footprint in terms of the liability it represents for the future. As we know, investments in coal have decreased significantly simply because financial investors see that the danger of having a stranded asset, a coal-fired power station that will be shut down by legislation in 10, 15 years' time, is a lost investment. At the same time, it's also the opportunities. Investors are increasingly looking to find companies in which they can invest with a return that also meets the expectations of those who invest their capital through funds, through banks, through financial institutions. We have seen an extraordinary increase in impact investing, and ultimately, no financial institution will succeed in the financial markets if it is seen to actually be creating problems rather than solutions.
Mr. Steiner, sustainability has mostly been a way for firms to differentiate their products. Would higher incidence of sustainability, conscious investing, shift this dynamic in any fundamental way for good?
Well, I would perhaps qualify a little bit the characterization you just provided. Perhaps 10, 15 years ago, it was a kind of branding exercise. ESG was a way of differentiating my company from another company. I think today it has become far more cerebral, if you want. capital markets are looking at companies. We have many indices, obviously internationally. UNDP, in fact, began 2 years ago to develop the SDG impact norms and standards, for instance, for bonds that will be raised by governments to go to capital markets. We now have SDG bonds with norms and standards that Mexico, the Ukraine, the New Development Bank are using to go to capital markets and raise capital. You are able to achieve better terms and conditions as somebody who is raising capital with a more transparent and more sustainability-oriented approach to production or indeed to management of your enterprise. So I think it is as much about the branding of a company as it is also about access to capital. And, you know, especially amongst larger companies, increasingly sustainability has also become a way of attracting world-class talent. Companies have increasingly found that in the market, in the competition for world-class talent, their ability to demonstrate their company's commitment to addressing climate change, inequality, the loss of biodiversity, is actually a way of differentiating themselves in a critical market for getting the best talent and skills on board. So it's multiple drivers, and obviously markets need to increasingly be able to allow investors and companies to have the metrics to demonstrate that this is not just soft talk, greenwashing, but indeed it is a very clear, transparent, and accountable strategy that a company has embarked on.
Mr. Steiner, what do you think are the mechanisms by which investors, especially retail investors, can make sure a firm is investing in more sustainable practices? Are firm disclosure enough? Is a third-party ESG ratings model a good direction? And what happens when unsustainable activities give higher returns to the investor? And what should be the investor thinking about them?
Well, at its simplest, a well-functioning market is a very transparent market. So I think disclosure is a critical component. And we have seen, you know, for example, in the field of carbon disclosure, a significant effort in recent years to establish the standards, the taxonomy, as we also call it, the metrics to be able to measure it, and also the frameworks and templates that allow companies then to report. Even stock exchanges, in fact, led by a number of emerging economy country stock exchanges, such as Brazil, South Africa, have made it already part of the reporting obligations for listed companies to actually be able to report on their not only carbon footprint, but their general environmental and social performance. I think the challenge in today's world is that we are in a kind of startup phase. There are many different standards, many different metrics, and I think financial markets, consumers, and ultimately also companies and shareholders are increasingly calling for a way in which we can standardize and universalize these, so we can truly assess a company in Malaysia with the same yardstick as a company in Brazil, or indeed a company in the United States with a company in China. And that, I think, is the one track. Secondly, I think increasing legislation and regulatory standards will also define how companies will respond, because your license to produce, to operate, to provide services is already today very often shaped by a way that a country looks at the responsibility of business, not simply to serve its shareholders, but in fact to also serve its stakeholders and consumers. And I think these are the kinds of trends and directions that are increasingly shaping at national level and increasing also at global level, the directions in which we will see sustainability becoming not an opt-in, not just a voluntary standard, but truly an accountability tool, a transparency tool to investors, to consumers, and indeed to legislators.
I want to talk about the financial institutions' role in sustainability. Targeted investment can be instrumental in the redeployment of capital to sustainable activities. A key role of financial markets is the efficient allocation of resources to the most financially viable companies, not just in the present, but even more critically in the future. How has, in your point of view, how has financial sector react to sustainability?
Too slowly, I think, would be the simplest way of certainly capturing my experience. I think what we have seen is that, you know, the financial markets are often viewed as a kind of free space in which the optimum between demand and supply regulates everything. Let us be very clear. One of the challenges we have faced over the last 100 years is that very often the cost of production falls into two categories: the cost of the inputs, the labor, the factory, the infrastructure of a company, that is then translated into a price for the product, including to make a profit, perfectly legitimate. What we did not capture is often what economists then refer to externalities, the costs that are imposed on society through pollution of air and water courses, depletion of resources, the collapse of our fisheries in the oceans, just to mention a few examples that we're all aware of. And these externalities were essentially put outside the company balance sheet. So society ultimately pays for them. And this is where we have had such a distortion in the way that our markets have worked over the last 100 years, that for a long time, financial markets and indeed markets in general continued producing, even though the cost to society exceeded the value of the product. And this is where we are now scrambling, whether it's on climate change, whether it's on loss of biodiversity, whether it is the depletion of vital natural resources such as our water resources. We have to find a way in which the cost of a product internalizes the true cost of production, and then we can actually use markets again in an efficient way. Take fossil fuels also. There was a moment about 10 years ago in the United States when the American taxpayer paid more to the oil and gas companies in subsidies than the oil and gas companies actually paid in taxes to the United States government, which means that consumers were not only paying for the price of petrol at the pump, they were also, through their income tax, subsidizing the cost of production to oil companies. These are distortions and essentially ways in which our markets have for far too long held us back from really getting to an economy where sustainability, the ability to produce and consume tomorrow without compromising the ability of the next generation, truly has lost many, many years. And the financial sector, I think, was too slow to recognize that, but is now, I think, scrambling to figure out how in this world that is far more critical, far more informed, it can quickly bring in the kind of yardsticks and standards to allow it to have the credibility in the eyes of those who entrust them with their money, their savings, their pensions.
Mr. Steiner, do you think that the private financing is in sustainability to be as important or more than public financing? And would the government impetus reduce the risk of such investments, or would it be as risky? Should government be spending in this direction in the first place?
Well, I think the examples I just provided on how, for example, economic policy, legislation, polluter pays principles have found their way into our national jurisdictions, I think already point to the fact that government has a very critical role to play, to create an even playing field, to create the transparency. But let's be very clear, in most of our economies across the world, the private sector by far exceeds the size of the public sector in terms of expenditure, share of GDP. So whatever we want to achieve in our economies in terms of transition towards cleaner production, more sustainable use of agricultural lands, water resources, clearly has to be embedded in the economy of the marketplace. And therefore, whether it is business, whether it is the consumer, these are really the arenas in which sustainability ultimately comes to scale and matters to how we change the way we consume and produce. So I think the role of government remains central and critical, but it is actually the private sector. And let's also remember, we often talk about the private sector as if they're only large corporations. In most countries, the private sector is in fact small, medium-scale enterprises. Even in a mature economy like Japan, over 98% of business is small, medium-scale enterprise. So we also have to understand the challenges and the programs of support, including in perhaps financing some of the transitions in technology that we have to make available to these small, medium-scale enterprises, because their ability to invest upfront, for instance, in renewable energy infrastructure, is obviously far more constrained, or cleaner production processes. So again, public policy is critical, fiscal policy is critical, innovation policy in an economy is critical here.
Talking about investment, especially for private from private sector, or the decision to make a sustainable investment, what role do activist hedge funds play in sustainability agenda?
Well, I think the answer depends really what kind of hedge fund investor or activist investor it is. I think we have seen both the worst and the best at play. There are hedge funds and investors who are purely interested in the short term. This has been, as many CEOs who have led corporations have repeatedly said, the tyranny of quarterly reporting, the constant pressure to simply maximize the payout to shareholders in the short term, including selling off significant parts of a company, are certainly drivers in the way that hedge fund activism has often led to companies losing their long-term viability to the benefit of the short-term profits and rent-seeking, so to speak, in the capital markets. But there are also activist investors, long-term investors who are not necessarily environmentalists. They are people who look at their investment in a company as a long-term relationship, who view the vital role that a company can play in providing services, in producing products, creating jobs. And I think that group of investors is growing exponentially. That's why we talk about impact investment, about financial markets increasingly honoring companies that actually take a long-term view. But the tension continues to be there, and let's be very clear. Predatory investors can always disrupt a company's longer-term strategy. And I think we see that debate, whether it is in the context of a global multinational such as Unilever, whether it is an enterprise like Tesla, that 10 years ago really was, a pioneering company trying to break into a market that nobody thought they would ever succeed in doing so. And 10 years later, it's the most valuable car manufacturing company on stock markets in the world. So it's an extraordinary spectrum of possibilities here.
Mr. Steiner, last but not least, how do you think the COVID-19 experience has affected the market perception of sustainability?
That's a very interesting question. I think in overall terms, it has raised the level of attention to sustainability. COVID-19, let us remember, is a zoonotic disease. It's a disease that essentially jumps from the animal world into the human organism. This is a phenomenon that we have seen with Ebola, for example, and other similar zoonotic diseases grow exponentially in recent years. It is just one example of how the balance between humans and, let's say, flora and fauna has shifted. The risks that environmental destruction has imposed on our quality of life is certainly something that I think people are increasingly aware of, and certainly this pandemic has raised a fundamental sense of discomfort with an economic system in which not only inequality is tolerated to levels that people don't find acceptable, but also air pollution. 7 million people die prematurely every year at the moment due to indoor and outdoor pollution. That's 7 million people. Something that we can perfectly get under control, but have not yet done so in many parts of the world, including in some of the wealthiest countries, obviously the levels being lower there. So I think sustainability has gained a significant amount of momentum. The question is whether out of this pandemic, the pressures to quickly go back to the economy of yesterday will prevail, or whether indeed the building forward better, which is where UNDP and the United Nations and our Secretary General has continuously appealed to countries to look at the recovery strategies as not just going back to where we were yesterday, but in fact to invest forward and build forward to a more sustainable world. And I think public support also, and sometimes people think that this is more a phenomenon of North America or Europe. Not true at all. Look at Asia, look at Asia's citizens. Whether it's Malaysia, Indonesia, Thailand, China, the pressure and the expectation of the public to address air pollution, destruction of the environment, quality of urban life has increased exponentially. And in that sense, I believe it is a global trend that will continue to grow.
I just want to ask this one last question, especially for in emerging markets. There's a lot of challenges for them to fine-tune their sustainability policy, given that a lot of things they have to sacrifice, given the backdrop against the backdrop of the economy and all that. What is your point of view of the political will, especially in the emerging economy, in terms of adapting sustainability into their policies and all that?
I think a generalization just between emerging and industrialized economies would not do justice to the differences. I think there are countries that have embraced, for instance, the challenge of climate change as a way of transforming economic infrastructure as existential, partly because climate change is imposing rapidly escalating costs on emerging market economies. Look at the natural disasters that we are witnessing just in the last few years, the floods, the fires, the extreme weather events. So on the cost side, and you can here look to the actuary capacity of the insurance industry, and whether it is for Malaysia now, or whether it is maybe for the Indian subcontinent, there are very dramatic numbers that illustrate the cost of inaction on economies. So the imperative to act, I think, is increasingly clear. But you are right, it requires major transitions in electricity generating infrastructure, transport infrastructure, agriculture production. But in some ways, emerging economies are also rapidly growing economies. They have less of a legacy infrastructure that they have to phase out. So some would argue that, in fact, the opportunity in the short term to invest with a future-oriented infrastructure policy that is decarbonized, or at least drives decarbonization, is the best possible investment to make, because the returns in terms of future market share and also the ability to perform in a global marketplace will increase exponentially. And I think with the advent of digital technology, of renewable energy technology, we're also turning on its head this notion that these are challenges that are too expensive for developing nations. In fact, renewables and digital have so radically changed the cost structure in our markets that, in fact, the deployment of these technologies is now driving economic growth in many emerging economies faster than any other sector. And just look at the world today and ask yourself, do you really want to continue to be dependent on a global marketplace of fossil fuels? Or do you want to have a sovereign, national, autonomous energy supply that essentially uses solar, wind, geothermal, and doesn't have to worry about supply chains, about wars, about geopolitical conflicts? The future of energy, Najib, I am firmly convinced by 2050 will be largely based on renewables. And that is an energy revolution, the likes of which I think we have never seen in such a short period of time. And it is an extraordinary opportunity also for emerging economies.
Achim Steiner, thank you so much for spending time with us. Really appreciate it. Thank you so much.
It's been a great pleasure. Thank you.